Hey guys, what's going on? Just going to take a quick look at Bitcoin. Ticker for this is obviously BTC, and right now I'm on the daily time frame. Uh, pretty exciting day in the market today. We had a big pump to the upside and then a quick drop. Okay, so in my last video, actually before I get into it, I should say the usual thing. First, if you're not subscribed and you want to get notified when I release these videos, click subscribe, click the bell, click on all. If you don't do that and you click away, you may have a hard time finding the channel again, just because it's a pretty small channel, it's new, and there's only around 1,000 subscribers. Also, if you want an exchange to trade Bitcoin on, I put a link to two different exchanges in both the pinned comment and the description. First one's called BitGet. Good exchange. I like it so far, but in a few days they're going to start requiring KYC. If you're not down with that, it's not really my favorite thing. What you can do is you can check out the other exchange that I have linked. It's called BingX, and they do not require KYC, and they're also offering some pretty good sign-up bonuses for you. Also, if you're unable to access them, you may need a VPN. So I also put a link to a VPN again in the pinned comment and the description. Okay, so in the last video that I did on Bitcoin, I mentioned that I was in a short. And I closed my short a few days ago for, it was around the 13% gain. I used a little bit of leverage. And in my last video, you can go back and watch it if you want to see exactly what I was saying. But I said I was in a short position and I took it because, well, we were at a resistance, right? So we were right around here, I believe. And basically we had confluence between this horizontal trend line and this downsloping level of resistance right here, right? So yeah, confluent area, enter the short, and I mentioned this potential line as a take profit area, okay? So look exactly where we came. We came down to it a few days ago, basically to a T. And I got this horizontal line. Just look at this price cluster, and if you had to identify one horizontal line that has the most relevance, it's going to be right here. So basically with this, I pay more attention to where the candle bodies are closing as opposed to where the wicks are, okay? And you'll see that while we have these wicks penetrating through on the daily time frame, by the time the candles close, like this is a perfect example right here, sold off all the way down, but by the time the candle closed, the body closed above the this trend line, right? So the bulls came in to defend the level all throughout here, this entire region. So like almost 10 days right here, the bulls were defending this horizontal line. Like look at this, body closed above here, wick came down, body closed above, and then eventually we had a big pump to the upside, and where we got rejected was this horizontal resistance level. And I had this marked out for months, and this is based off a Fibonacci level, and also if you look left, it's the it was support right here, and then it was resistance right here. So just, you know, basic price action when you have an established level like this, both support and resistance. If the price is below it and the price approaches it from below, you can anticipate that this is going to be a resistance level, right? So confluence with the Fibonacci, and just like the previous price history on this. So we came up, got rejected, smashed back down. And yeah, this is the key level where we are right now. Okay, so long-term support, price breaks below, it was resistance. Here the price cut through it, and that's a bit of an anomaly there. But yeah, this trend line is still in play. This is my lower range of support right now, and this down sloping level of resistance would be the top of the range, right? So right now the lower level and this upper level, but you'll see that these lines are converging and the trading range is going to get smaller and smaller. However, now this needs to be said. Look at this candle right here. This is a hard rejection. Price came up to it. A lot of people were waiting here for the sell, push it all the way back down. So far this candle looks quite bearish, right? And something else that I need to show you, which leads me to believe that it's more likely that the price goes down from here than break up. And the reason for that is because if you look at this liquidation heat map, look what the market makers have done. So we had all these people in leveraged short positions just above here. So what the market makers, the big money, did is they drove the price up, got all these people liquidated, and now the price is coming back down. But if you look at this chart now, we do not have much liquidity to the upside. But look below. This is like $100 million right here at just slightly over 26,000. Moving down, another 87 million, 46 million. Now there's a lot of liquidity here to the downside. So think of this as almost like a target, right? And now this is only on the 3-day chart. Let's take a look at the 1 week here. Okay, so the 1 week time frame is showing a different story here. While we did take this out, we do have a lot of liquidation levels to the upside still, but yeah, 215. I think the next move might be to the downside, guys. Let me look at the 1 month. So the 1 month does show that there is still some liquidation levels up here, but yeah, there is more to the downside right now. Now there's another website called High Block, and these are the levels on the High Block chart. Okay, so I'm going to open this up, and you'll see the largest liquidation level. It's actually around here. It's around like between 24,000 and 23,000. This kind of neon bar here. So this level here, if the price comes down to it, will liquidate the most people, right? So if you're to think like a market maker, like someone that has billions of dollars to get into the market, they can't buy anywhere they want, right? So they need to enter their positions in these liquidity zones, right? So if they wanted to build their position up, they can push the price down here, and then a liquidation is just like a forced sell event, right? So there's a lot of people that enter trades here on leverage that will be liquidated, will be forced to sell if the price comes down here. So if somebody wanted to build a very large position, they would be able to do it right here. And where the price currently is, that's unlikely without moving the price too much. So will they decide to take it down, fill their bags here at around, I think it's probably around $23,500, $24,000, and then move it back up? That would make sense, but I'm not really going to anticipate on that happening until I see this horizontal level break. Now I'm going to change it to the weekly time frame, and I just want to have a look. Now what I like to do is I like to look at the liquidation levels, and I like to pair it just with like the main levels on the chart. Now I just mentioned that there's that big area of potential liquidations between $23,000 and $24,000 according to that high block chart. So the question is, does that coincide with the price action? And it kind of does. So this is a level that I had marked out for quite a while on the weekly time frame, this horizontal line. So you see where these, the top of these two candle bodies close. They close kind of in alignment, and they did here as well. So this to me is a very significant level, and I have that at around 24,323. So if the price did come down here, that would enable some of the bigger players to fill their positions. Now it looked like from the high block chart that the liquidity range was also a little bit below this. So it's very possible that if the price does come down here, it can go a little bit further down. Because remember, what I'm paying attention to is where the candle body closes, right? So if there was a sell-off, the wick maybe come down here to gobble up all that liquidity, and then maybe the candle body closes above here to salvage this level. That would make sense. But again, I could be getting ahead of myself here because we are still within this range. Okay, I'm going to flip it back to the daily. So just pay attention to this for now. This is the downsloping level of resistance. This is the current horizontal level of support. If the price does break below it, it doesn't necessarily mean that the price is going to slam all the way down to those lower levels. But I do think there is a high probability that the price does come down there at some point. Now, it seems to be taking a long time, but this range can continue until October 12th. So by October 12th, the price is going to have to pick a direction, right? It's either going to break out of this, which would be a very bullish event, or it'll break down. And yeah, October 12th, that may be when we see the push down for what you call the whales to load up their positions before a larger move to the upside. So we'll see. We'll see. This rejection candle though does not look good. It's weird though because a lot of the altcoins I've been looking at lately, they do look pretty good. So for example, I just looked at Bitcoin Cash. If you haven't watched that video, I suggest that you do that. It's the last video I published, and Bitcoin Cash actually looks a lot more bullish. Like the price structure looks a lot more bullish than Bitcoin does. Another one that looks good, I just covered that as well the other day, that's Stellar Lumen. So maybe take a look at those videos and you'll see that the price structure looks a lot better on those than how it looks on Bitcoin right now. Okay, so I think that about wraps it up. I just wanted to get a quick video up, but I think this went a lot longer than I anticipated. So anyway, once again, if you're not subscribed, click subscribe, the bell, click on all. If you found this helpful, smash a like button. And if you want a place to trade Bitcoin or any of the other coins I talk about, check out the links that I have in the pinned comment and the description. All right, guys, take care. Have a good day. Bye.